Hello everyone and welcome back. Well, they say sometimes the market leaves its footprints. That is, it shows us what it wants to do next through a mixture of supply-demand dynamics. At this stage, we can see that there could have been a maximum pain. But does the previous 24 hours of trade show us something a little bit more about the sinister movements that the market wants to do next? Stay tuned as we cover stocks, cryptos, and commodities in detail. See you soon, guys. This will be a great one. Well, welcome back everybody to the daily show where we talk about stocks, cryptos, and commodities. This is for the market close 24th of May, 2022. And I thought we'd start here with the Google search. This shows us what everyone's doing. The two words, inflation and recession, probably 2022's biggest words in the stock market and markets around the world. What's interesting though, is that recession has now hit peaks of search that are equal to 2020 and 2007-2008 financial crisis. So basically everyone is very concerned, rightfully so. But does this mean we're getting ready for the bull market rally within a potential bear market? It does make some sense. When everyone believes something, often that's the time that things switch. So let's have a look at a few macro things, then we'll get into the market performance over the last 24 hours, and we'll talk about all the markets around the world as well. So stick with us for that. Let's talk about slowing demand for big ticket items. Of course, what's first to get hit during any type of pullback in markets, in general, the hype things. If you look at Rolex watches, if you look at high-end Birkin bags or something like that, or any of those types of collectible markets, they'll all be dropping because people are starting to say, you know what, big ticket items, not going to do that. But services have been on the rise, very, very large rise here. Now, partially it's due to seasonality in the US, of course. We're going into the summer. We're in the summer right now. But in general, this is a very, very big switch. Big ticket items are down and services are up. Something you can consider in potential investing and, of course, trading for specific stocks in the future. Another thing that we've been really rattling on about for the last 2 weeks has been why we could be forming a base here. It's just unusual to have so many weeks down. We're now in week 7 of consistent weeks down on the SP 500 and Nasdaq. That's rare. 53, 70, 80, 2001. I've never seen it in my trading and investing career, and it's the first time it's happened in a long time. So statistically, it's never gone further than this. That is, 8 weeks has been the maximum drawdown before seeing a green relief rally. Are we near the close? Or are we very, very close to that point? It seems like it could certainly be occurring. Fear and greed index, of course, fearful, very, very fearful here. And it makes sense. Everybody's searching recession and inflation. So how could people not be fearful with 7 weeks down? It's just going to make sense. For the last 24 hours, things happened very strangely. Again, this heat map here of the close doesn't really show us what occurred. We did get the pullback, but the pullback was quite severe, and specifically it hit certain stocks. I'm going to look at Google with a deep dive today because that was a phenomenal level that it hit in the last session. But let's have a look at the markets. Some things occurred very strangely. Look at the Dow. The Dow Jones actually ended positive after pulling back to the zone we discussed in the last session. S&P 500 went down and then rallied up to only being down 0.81, better than the time of the recording yesterday when we were talking about the market showing its hand to most likely want to go bullish over the next couple of sessions. And IWM and, of course, Nasdaq both declining and making some recoveries near the end of the day. The Nasdaq was very weak though, and I think I can really explain that to people today when we look at some indicators a little bit later on. What were the best sectors? Well, it was defensives, utilities, consumer staples, gold, something we've been very, very bullish on the last couple of pretty much week. We've been bullish on that. And what was not good, anything to do with risk. At this stage, semiconductors, XLK, they were the sectors really getting hurt at this point. The VIX, the fear index, didn't really move as much as you would think. It kind of jumped up there to around 31 and then rallied back down as the market started to really recover in the back end of the session. But the fear and greed index isn't showing us too much. Close under 25, certainly quite a bullish sign, and a close above 35. Yeah, we're in peak fear, and I would expect new lows to be made at that point from the market and potentially a wicked capitulation that will cause, some very, very negative things to happen in these markets. PCC, put call ratio, still remains quite high, showing that there is still a significant amount of puts being opened, still above 1. It is lower than it was though. And I think this is just more to do with consolidation between bull and bear dynamics. A lot of people are bullish, but a ton of people are bearish at this point in the markets. And of course, there's a lot of valid reasons to be so. But that's often where the market does that trap kind of recovery and does pull through. US 10-year declined for another session. This is something that up here, we as a community really kind of picked that would probably be the peak for the US 10-year for now. It's since declined, and really it's been doing the right things. I'd like to see it through this level, just above 2.7, and that to solidify further decline here in the US 10-year. That would be good. And of course, if the 10-year is coming down, it means that in some ways, the Fed's job is being made easier. Remember, they're trying to really slow demand because of the supply issue, and they're trying to slow inflation. One of the ways that can be done so is to reduce the demand, which is happening. And at this point, they don't really want to rise or do any kind of interest rate up to 2.5. Think about the US government. Could they even afford to technically pay back their debt at a 2.5% 2-year rate? That would be pretty terrifying. So at this stage, not occurring. That's always led into TLT. This is the most closely correlated to the US 10-year, or one of them. And as we've been talking about, this is the range. This is the range in terms of the first move, the second move. Ignore the false break because that's not really a thing. And then this is the recovery that happened. We kind of expect something like this to occur. And so far, TLT, since we talked about it, has been doing pretty well. It's been the more solid market, and it had a nice little breakout in the last 24 hours as well. Hopefully it can maintain that and move towards the 122. So yeah, realistically, bonds actually coming into focus here, which has been unusual considering how hateful they've been over the last 12 months. It's been very bad to be a bond trader unless you're going short. Dollar index, more money coming out of the DXY. Realistically, again, we kind of expected once it broke through this demand or this trough over here, the low, that it was going to weaken. I was hoping for a pullback, and I still kind of expect potentially the DXY to do something like this, but it is breaking out. And luckily, we didn't get trapped as a community over here, because that is a sneaky, sneaky trap that really switched the perception of most retail traders out there. Ask yourself, did you get trapped thinking the dollar was going super long here? If you did, that's because the spread of that idea was very solid. And you can actually look at sentiment reports and you'll notice that a lot of people are incredibly wrong on currency trades right now, and they're getting crushed for that reason. Let's move over to gold, another one that we've been quite positive on. Look, gold put in a great session, another strong session for it. I'd like to see gold come back a little bit here, possibly to the 1840 zone where there's been a lot of demand in the past, and I'd like to see it recover off that point. It may not come back. It's been very strong. It breached our downward trend here, made us go very, very bullish, came off the demand, came back to these levels, which was significant, created a little double bottom there, and then springboarded all the way to the first take profit zone over here. But gold still remains fairly underpriced compared to where it could be in the future. And it is coming into a decent seasonal, which we'll talk about in future videos. So if you're interested in that type of stuff, make sure to subscribe and smash the like button as well. It does help us out, and I do appreciate everyone's help at this stage. We're getting close to 100, and I really, really appreciate that. So a bit of a lifelong dream to get there for sure. So let's just talk about the other markets. Gold, still looks positive, but I could see pullbacks occurring here. Let's talk about US oil. Oil is a tough one. You can tell kind of the market's confused about what it wants to do as well. Long leg doji, little bit green. We've got a huge resistance here at that 115, 116 range. And if we break under 106, I think oil will continue to decline back down to 98 or even 92. It doesn't tend to like weaker US 10-year. I'll say that about oil. So demand could actually be dropping, even though I know you're reading in the articles a certain thing. Remember, what you read in the news and what the reality ends up being. Ask yourself that question. Does it ever really work out for you? Probably not, because the people writing those articles aren't really tapped into this market. But US oil still quite weak. Natural gas has had still further strength on it. I am still weak on this market, even though the technicals are strong. It's just because I know the way gas works. It often has huge blow-offs. That is, it goes crazy and then it dumps. And they call it the widowmaker. Be very careful on natural gas trading. It is one of the hardest trades out there if you do get involved in it. Tesla, unfortunately, showed further weakness. It's something we've been warning of. I just don't know about this chart right now. It looks kind of sick. It is in a demand that is the previous lows here, 620, 626. I could see buyers coming in for it here, but if it gets back under this zone, I could really see Tesla falling back down to the 550. And it's been an incredible decline here for a few weeks, ever since the whole Twitter fiasco and everything else that's occurred. So it is on demand. There's no doubt this is a big level here, 630. but Tesla's still looking very weak, and there's no price action to say that the change of trend has occurred. It just keeps making new lows. And remember, the Nasdaq isn't making new lows. The SP500 isn't making new lows. So there's something going on here, and it's really been showing its hand for a while now, but specifically this was not good. So we do need to see some strength. I'd like to have it past 676. Some people will be looking at this session, and if you see the right build up in the day trade, maybe there's something back to the 20 moving average. That's a zone that I think has been shorted a bit. So I could see bears coming back in around 674 for this stock. Let's now move over to Google, because this was one that was almost surprising. Google's a great company, yet it was belted along with that Snap news, Facebook, Snap, anything really to do with social medias, particularly anything to do with tech really in the last 24 hours that wasn't Microsoft got really hurt. And it came back into this range here, which is a huge structural base previously. And look at the rebound they put in it. Boom. There's a buyer there. Look at that volume. They came in hard. So somebody came in and they purchased this zone. I've had this here for a long time, like looking at this box and thinking, does it really make sense Google would stop here? And it did initially. But see how these two zones, this zone here and this zone here, did create relief rallies. Well, did we just hit the relief rally in Google? The split's coming up soon for it. It's starting to get back to some pretty nice valuations in terms of just general metrics. And I understand there's still weakness in front of it. A lot of people go through that, but it hit a big level yesterday and it actually fell. Let's just look at this. So this was the close. It fell upwards of 8.39%. So strong buying there. I'm really interested to see this in the next 24 hours. There's a big gap in this range as well that it might want to fill. A lot of stuff going on there with Google. Let's move over to XLV, one of the sectors in focus. You can see it didn't have anywhere near the volatility of the other ranges. It actually ended up 0.3%. And this is just because it's a defensive sector. It can do well during inflation or deflationary environments. It's healthcare after all. They just changed the prices. And if you notice, we have that strong base. And this is why it's our sector in focus at the moment in a tough environment for sure. Now, what about risk? Well, I've shared this with you a bit, and this is one of the indicators that I use to really figure out whether there's risk on or risk off in the markets. And at the moment, it's just all risk off. But we've hit a critical point, and you'll notice that this is where we sit right now. And why have I got that zoned up? Well, it's because of the previous levels that were reached back in 18 over here. You'll notice there was a lot of potential demand around this ratio, this 1.88. XLY versus XLP. And what this shows is really risk on and risk off in the markets. And it's been 2022 mostly risk off. There was a little portion of risk on, but it's been a horror show for anything growth. Have we just bottomed that? Well, we haven't hit 2020 lows, which is down here. Hopefully we don't get down there just too soon. But we are at a point where I could see potentially some gains here in the tech market. Hopefully the tech can bounce off this area. This is where we hope risk on comes back in. It's not out of the woodwork yet, but ideally if it does like something like a double bottom, then we can move toward some type of relief rally, and then potentially later on in the year, as we know with midterm election years, they tend to have a second dip later on, which is what a lot of larger fund managers do tend to expect. The DAX doing nothing much. Pretty safe market in comparison to the US at the moment. It's done a lot better at holding up. And when I say safe, inverted commas, of course, it's not really that safe, but it's done better. And here is the potential inverse head and shoulders. Here is the neckline, and here is where you want that break. So the DAX holding its best it can. We'll come back to that in a few days. Now, the Dow, this is where the real strength came back into it. Look at these levels that we had in the previous session. We were talking about this. We're talking about this level here being very, very strong for the Dow. And it was at least initially, and then it came back down to our second demand and just sprung off that level. Like, wow, that was a huge spring. So that's showing that the market's pretty happy to take a little bit of risk on when it gets its right price. And was that just like a shakeout through the other indices? We'll take a look at the Dow. I mean, it just came back picture point bang into that area. And then that's not just a little bit. That's a capitulation sell with a big springboard through the session. So decent amount of volume here, new peak on the Dow. Does that mean that we go back to where we were over here on the 18th of May? I think it's a likely thing. I mean, this is the maximum pain. This is where we change trend right here on the first direction. We go through that last lower peak over here, and we then come back and grab liquidity and now we're moving towards this. I hope so, because that's the kind of logical conclusion of the change. There is a change of trend here on the first time frame for the Dow on the 1 hour. So that's, again, a little bit of a positive. The IWM, the Russell, it held okay. That's 2 strong buy wicks now. I hope that we can get a follow through here. That would be quite strong for it. And obviously we know that there's resistance here. There's potential follow through. And think of this as a potential springboard as well for pickups. Now, why am I looking at this and saying, oh, it looks a little bit more positive than negative? Because we're getting a lot of wick purchasing. This is fairly rare to not try to follow through. Like it's fairly rare for you not to see wicks and not to see potential rallies up, especially when they get a few of them. So that's why we're looking at it from that level. What is a little bit scarier is probably something like the Nasdaq. So we mentioned yesterday, we thought, oh, well, what do we have? Do we have like a left shoulder, potential right shoulder, and some rally through here? I think at the time of recording, we were basically about in this point here for the futures. Well, the market just dumped, then it rallied. And as we know, tech is the toughest sector right now. It's really tough because we see on that XLY, XLP, risk off is horrible. It did recover back to the zone, but it hasn't even gotten close to this level up here, which is a huge change of trend. So significant. The Dow's changed trend on the first direction, but the Nasdaq hasn't. The Nasdaq's still quite low, and it's really make or break, into these meeting minutes here for the Fed. It needs to do something. This is still very horrible in the Nasdaq at this stage. SP 500 looks completely different. Let's look at the daily here. Big rejections off all of these zones. Again, nice strong slingshot there. Let's have a look at the last trade session. So there were a few levels that we were looking at around that 9393 area during the futures. It came down to what we call a defended zone, which is in this gap range here above 3900. It tried its best to hold and then it fell through. And the next level it went to was realistically, if you look on the real market rather than just the futures market, it went down to exactly where it had dojied off before. This level here around this 38.73. And I think that's where the pickup really occurred. If you go down to a 1 minute and you were actually scalping the day, there was a very nice little base that it formed here. It made a peak, busted it, and then it came back later and grabbed. And you'll notice this change down here was very significant. Some of you will know that type of pattern and you'll recognize it, but that was pretty significant if you were there for the day trade. As it fell through, this is obviously where it opened. It opened at 39.30, didn't even manage to hold up. And even once it got down to something like a 3900, there was just no turnaround. So usually when you trigger a zone, let's say you say 3900 or 3920 or whatever level you have, you kind of want to go into the smaller time frames, even a second chart, whatever. You want to see a turnaround. There just wasn't any bid. There was absolutely nobody trying to get anything. There was no bids here. Like, there was nothing that was pulling this market up. We didn't see any sequencing of events where we could get rallies in. The rally happened down here. There was just nothing there for you. So it does help to look for a zone on a higher time frame and then add a little bit of confirmation into it if you want to get better orders. That's always something we talk about in our course. It's something we talk about in mentoring. If we can get confirmation on a smaller time frame based on a higher time frame idea, it does help us out. So at the time of recording, we're up a little bit more, 39.59 here on the futures. Things have certainly looked a little bit better here in the 2 hour and 1 hour charts. And we're not back to filling the gap yet, but certainly that last 24 hours of trade, another strong buy. For a lot of people, they're looking for that lightning bolt. And the next big range is a 40-40, which is where the daily 20 moving average is. And I think this is definitely a opportunity here for the market around that 40-80 zone, which is the previous supply. There's a lot of inefficiencies here, a lot of things that are going on. I would like to see the market get back up into this range. And at this stage, it looks to be showing towards that kind of idea. Let's have a look at max pain, 395 here for max pain. Still a ever evolving kind of thing. You'll notice there's a lot of puts, there's a decent amount of calls that have been opened all the way through these ranges. So you can't really take too much from this just yet, but it's at 395, so you guys can see it. And Bitcoin hovering and holding as best it can that 28.7 area. So that's 1, 2, 3, 4 defenses. This has got a double bottom on it as well. So it's the first time Bitcoin's looked a little bit better here with that nice spring. And you know what I would have really liked, even though that would have been nasty? Did that make a new low? No, it didn't. If that had actually made a new low and gone like this, when that happens, that's what we call the max pain. And if you do get a new low, it takes out and sweeps all these orders, similar to what happened in the market. And that is the kind of positivity that you really want to see. But it does look much better. It's forming the base. And as I've said many times, 32,000 is the big key level for it. But I can see why people are a little bit more positive here on Bitcoin at this stage. And it looks like it's trying to make a rally back to this point. If the market goes, the Nasdaq and the S&P start running, then we can move towards 32. There's not too much bear case I'm looking at this stage. I understand that a lot of people want bearishness, and I get you. It's just that we're at this point where unless we make a new low, and believe me, if we make a new low and we close it, bad things could happen here on this market. It just looks like the current market is trapping lots of people, scaring the rubbish out of all of us, and it looks like it's trying to field some kind of base. Hopefully it is. If you haven't already, follow us at FX Evolution on Twitter. It does help us out. We're getting a massive following there, so thanks so much. And do remember, a lot of this is probably going to be triggered by the old meeting minutes. So that's Wednesday, 25th of May, 2 p.m. New York time. We have the FOMC meeting minutes, fun. Then we've got the prelim GDP, great. And then we've got core PCE price index at 8:30 on Friday. So a bit of news coming out about the US. If you're not sure and you don't understand, then sometimes it's better to stay out because there are risks. But realistically, it comes down to the FOMC meeting minutes. Let's see what they have to say. And I hope in some ways that we do get the relief rally so that we can make more sense of these markets right now, because 7 weeks down is a lot. It's a lot. Thanks so much. Subscribe if you enjoy the content. Give us a like. Catch you in the next one. Bye for now, everyone.